Good morning, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is March 31st, 2013. Happy Easter to everybody. Lots to talk about, so let's get started. So what I'm going to do with these videos is, first of all, the video normally is too long, and then sometimes I make it too short. So what I'm going to do is I'm going to get right to the point right in the beginning of the video, and then that'll be that. And if you think that you want to stay to watch the rest of the video, then you're more than welcome to. And again, thank you very much for those people who are hitting the like button, and I do appreciate the comments that you guys have been leaving. It just helps me to continue on making these videos. To be honest, I kind of wanted to stop, but as long as you guys still want to see these videos, then I'll still post them for you. Alright, so let's get started here. As you can see, there's a lot less lines on this chart here. Let me just save this, and the reason I did that, and it may not look like it now, but let me just load what it used to be. Yeah, it's not that much of a difference, is it? Anyways, I tried to clean it up as much as possible, but I left what lines here, and these lines again are mathematically calculated levels, I should say, that are based on a mathematical calculation that was invented last year in December. No, not last year. December of 2011. So this formula that I've been using is a little bit old. It's over a year already, so it's already been proven itself time and time again, as you can see. Alright, so let's just get started here, and if you're new to these videos, I just want to let you know that you see the length of these lines are different. When I create these mathematically calculated levels, sorry, it's kind of early in the morning, these formulas, where the line starts is the day I actually created them. So I created this line on this day here, which was September 7th, and this line here, which is September 13th, so on and so forth. This line was created here, well, around here, which is about what is that, November 21st, so on and so forth of 2012. So this will give you an idea of how fresh the line is and how old the line is, that kind of thing. So this 157 level, I talked about this level to you guys all the way back in September of last year. So if you rewind and you want to check out a video from last year into 2012, you'll see that I actually talk about this 157 level, and as you can see, the market went right into the 157. Not perfectly right into the 157, but pretty close to it, and then we get a small pullback right into the 154.10, exactly to the 154.10. No, I thought it was exactly. It was actually the low. If you look up here, you see the high, low, close. The low of this was 154.20, so it's about 10 cents off, and then the low here was 154.10, which was exactly that, and then we get a bounce back into the 157. The high here was 156.85, so we're getting closer to the 157. I talked to you about once we get close to the 157 or any level. Once we get close to it, that just simply means that it's already used. Anytime you hit one of these levels here, it's not as strong anymore. It's kind of like the drywall. I mean, if you're, I don't know, 5 years old and you punch the drywall, it's not gonna break. Depends how strong you are, but it may not break. And if it doesn't break, the next time you do punch the drywall, it probably will break. That kind of thing. Same with these levels. These levels, they're like drywall. I mean, they're as strong as drywall. So once it hits the level, whether it be intraday, a gap, or a multi-day hit, what'll happen is it'll get weaker, and there's a possibility that it may break through. Now, does that mean that this one here will break through? No, absolutely not. That's not what I'm saying. What I'm saying is I wouldn't base a trade off of it anymore unless I have other factors telling me to make that trade. So to make a long story short, and again, I don't want to get too far into it. I want to just get to the point in the beginning of the video, so you can just leave if you don't want to watch the rest. The 157 level here was almost tagged again. I initiated another short, okay, based on not the 4 rules that I always talk to you guys about, with volume, with depreciated volume, and then a volume spike, some sort of reversal candle, or and you have to be in some sort of a supported resistance point. I didn't base it off of that, but I'll get into that shortly. But I did initiate another short trade here with by buying the SDS long. That's SDS. And by buying the SDS long, the SDS is actually a reversal of the SPY, which is a 2 times short of the SPY. And when I say 2 times, it's double. And I believe that there's a calculation for that. You can look that up for the SDS. But by going long, the SDS is going short the SPY because the SDS is opposite to the SPY. All right. um, like I talked about in the previous video. Oh, and the reason why I didn't release a video, actually, to be honest, I actually did release a video, but I didn't realize the sound was on, and there was a lot of background noise, and then I was forced to remove the videos due to copyright stuff. So I released a video. It really didn't matter though, which is why I didn't re-release the video, because I initiated the short towards the end of the day, meaning like 30 seconds before the market closed, I initiated the short by buying the SDS long. It wasn't something that I was planning on doing. It was just something that I saw, and I'll show you why very shortly. But here's a short story. Just like I talked about in the previous video, if we break down from this trend line here, you break down from this 154.10 level, I do see a pullback at least to the 50 moving average. Okay, one thing to make note, if we do break down from there, we're going to have some support here. Okay, and we're going to have some support here. So there's going to be a lot of support to break down from in order to get past here. But once we get past, or we close below the 50 moving average and below these gap fills here, then I think, to be honest, we'll probably head down to the 149.51 level before we see any substantial bounce. Now, if we do get a small bounce here, and again, I've been talking about this for a very long time in all my videos, we should expect to see a bounce back into the 154 before we get another lower low, which is the 147.05. And I really like this 147.05. Basically, I love the 147.05, but I like the 145.07 level the best, okay, for another bounce. Okay, so this is my plan. I'm drawing out my plan now, and then we'll go all the way down into this gap fill here. And this is not a mathematically calculated level, but this is just regular common sense technical analysis. All right, they should get a bounce back into the 144.07 and then come back down into the 139.07, which is this pivot point here. Okay, basically what I'm trying to say is, if this is the time where, because it is March or the end of March, if this is the time where the market should reverse, that's what I should expect to see. Lower lows and lower highs, which indicates a trend change. Okay, let me load my drawings back up. All right, so that's what I see on the bearish side. Again, just keep your eye on the 154.10 level and the 50 moving average. Basically, what I want to see, what I really want to see, is a close below this gap fill here. Now, if we get a close above this 157 level, and then keep in mind that I would not doubt the 157 level does not hold. What I mean by that is, we've already come close to it once. It's coming back to retest it again. It could break through. Keep in mind, if it does break through, if it does break through on volume like we have here, which is super low volume. I mean, you see this blue line is the average, it's way below volume. And the reason why we have low volume is because, just like I always say in all my videos, and maybe you newcomers don't know about this, but I know people like Favco and maybe Mike, and they all know that volume is very important in the analysis that I do. Before and after holidays are going to be low volumes. Mondays and Fridays are also going to be low volume days. So just keep that in mind, that just inherently Mondays, Fridays are low, and before holidays and after. And that's because traders are taking vacation, you know, stuff like that, during the holidays. And you'll notice towards, Christmas time, the volume does decrease and such. But does it always 100% happen? No, not always. But this is a game of odds, and you want to put the odds in your favor. So the expectation should be lower volume, and the lower volume equals an upside bias, meaning you should see the markets just go higher based on low volume, which is not real. When I talk about the eBay story based on volume, you'll understand why volume is very important, and why if you have low volume and the price goes up, that price is not a valid price. All right, so I would not be surprised again that they close it above the 157 level. Let's just say they close it above the 157 level here on Monday. because Monday is inherently a low volume day and it happens to follow a holiday. Okay, it's not unusual for traders to take, the Monday off right after you get holiday on Friday, make it a 4-day weekend. So they might actually spike this guy up all the way up, maybe up here or something. I have no idea. I would then probably consider initiating another short. The short I initiated here by buying the SDS was very small, a very small entry. Maybe not very small, but half my normal entry, which basically means if we get another spike up here on low volume now, then I'll probably initiate another short, wherever it closes above this. Sorry, let me take this out. I'll probably initiate another short when they spike it on Monday, and then my stop will be another confirmed close above this guy on higher volume. Understand? I know it's kind of confusing, but let me just kind of see if I can explain a little bit better. We have low volume here, right? Everybody knows that. We can obviously see that. What we need to do is see a spike in high volume in order for anything to break out of any level, right? If you want to break out of a level, you need that volume support, the support behind the price. When you see a reversal on high volume, that is in a resistance level of some sort, and that indicates a reversal. Okay, so what we're looking for now is an indication that this breakout, if it does break out, is valid. And without that volume spike, okay, then it won't be valid. So let's just say we get a huge candle like this, right, as an example, and then we have, a volume spike, something like this. Then I would say, well, that pretty much tells me that this may continue higher. Okay, and at that point I'll stop out for a small loss and wait for the next entry. I don't want to hold on to it just because I think, oh, maybe it'll come back down. No. Okay, let me give you scenario number 2. We close higher, say Monday. Okay, the next day, so I initiate my short here, right? The next day we close even higher. Let me do this. But we have it on high volume, and I was just talking about how high volume would indicate that it could continue higher, right? Because it's a breakout. However, what if we have this? That's a shooting star, right? That's a reversal pattern. We have enough candles here indicating a pivot. That's a reversal candle, and let's just say we have it on high volume, as high as this guy here, so maybe around here. Boom, we get a spike. Let me just make this a little bit. We have low volume, and then boom, we have this high volume. Sorry, let me make it right under this candle here. Boom, we have this high volume. Okay, well, as high as that, I don't know why it won't let me draw it in. It's kind of weird. Anyways, you guys get the picture. Then I would not initiate another short, but I would hold on to my current short and let this guy fall. Okay, the reason why this may happen is because there's a lot of market manipulation out there. We already know that. We all of us know about that. And with the Feds or the banks or whatever, or CNBC, they're the to be honest, they're the culprits of the markets. Okay, CNBC will come out and say, oh, the market's gonna go, Dow's gonna go, I don't know, 16,000 instead of 15, and everybody's gonna jump in the markets and blah blah blah. Again, if you're an institution, you're buying millions of shares, not just, maybe not a million, but hundreds of thousands of shares, not just, 1,000 shares like us retail traders. So what do these institutions need to do? They've already made the money because the market has just been going up and up and up and up, right? How are they going to make money? It's, again, you don't make money until that is sold, until you buy and sell. That's the key. A lot of people don't realize is that I hear a lot of newbies out there who don't even know how to trade like we do, and they say, oh yeah, I bought this stock and now I'm making so much money because I bought it at $10 and now it's at $20. Well, you guys didn't make that money yet until you sell it. Okay, so the institutions need to sell it. Who do they need to sell it to? They need to sell it to the retail traders. So what do they need to do? They need to release rumors. They need to do CNBC News. They need to have the Jim Cramer come out and do all this kind of stuff. So to us retail traders, not us though, not the ones that are watching this video, because we're not gonna fall for that, right? Obviously, it's the other people, the ones that I talk to, who say, "Oh, Jim Cramer said this," or I'm not saying. Okay, let me take a step back here. I'm not saying Jim Cramer is dumb or anything like that, but to be honest, a lot of people trust Jim Cramer, and sometimes when I look at the analysis that he does, it goes totally against the technicals, and normally the technicals override Jim. But you got to realize that it's not because Jim doesn't know what he's doing. He knows what he's doing. It's just that he's a long-term trader and we're not. We're short-term traders. We make money when the markets go up, when the markets go down. Pivot points here. The pullbacks, the bounces, that's where we make the money. Jim buys low, waits, I don't know, 20 years and then sells high, that kind of thing. But I don't have that kind of capital to do that. So, to make a long story short, okay, again, this is the plan. If they spike the markets, this is my plan. This is what I'm going to do. Now, if the markets just continue down, then obviously we just talked about that. And now, that does it for this analysis. This is the beginning part. So you can turn off the video. It's already 16 minutes. And I'm just going to continue on with my rants or whatever else that I want to talk about. And that way we can kill two birds with one stone. Alright, so now I'm going to reload my drawings here. Okay, we've talked about the scenarios for next week. Okay, we talked about the possibility of this guy going higher. I did another calculation, and believe it or not, I came up with this 165.80. That is a stretch. I'm going to tell you right now, that is definitely a stretch. I don't know if it's going to get up there without a correction first. Okay, I'm looking for, a 10% correction at least first. Again, that's what I think. It's not what the technical analysis is telling me. It's just what I think. And I can't trade based on what I think. This is a business. Okay? Just like the movie 21, this is a business. 165.80 is a possibility. And right now we have lows, higher lows, higher lows. We have higher highs, and higher highs. Therefore, there's nothing telling me right now at all, except for this guy here, that the trend is changing. And what do I mean by that? Well, the high of this is 165.85, and the high of this was 156.80. Okay, so basically this has actually reached 5 cents above the previous high. So technically, on a technical level, if you count the highs, this guy is still continuing its uptrend. Okay, so this may actually go higher. When I draw a trend line here, like so, the possibility of us getting up here, up in this trend line, is not unheard of. Alright? Now, this could still be a consolidation pattern to head lower, but it's a this is why I don't like playing consolidation patterns. It's a very weak consolidation pattern, simply because we've already gotten above the previous high. Does it mean I can't still go down? No. The reason why I initiated a trade is because my stop is going to be close. So if I do lose money, it's going to be very little. So it's not really going to be a big deal. Not only did I not go in 100%, now I've never gone in 100% of my capital, okay? Just keep that in mind. But I have a set amount of shares that I normally buy, and I only buy half when it's a situation like this. When it's kind of like, maybe 60-40 chance that it's in my favor. Or actually, I don't want to go with that much. Maybe 70-30 chance that it's in my favor. Then I'll initiate the trade. Okay? Now, some other things that I want to show you. Let's take a look at the intraday. And what I want to look at is the hourly chart. You see that? This is not really considered a reversal candle. It is some sort of spinning top, but it's not after, a nice pivotal area here. But it is a reversal candle. It is in a resistance point, and it did do it on high volume. You see that? This volume is higher from the past, I don't know how many weeks. Okay. Granted, however, this hourly candle here was actually, believe it or not, within the last 10 minutes. Boom. You see that candle? Most of that volume came from this candle here. Okay? And this is a somewhat of a shooting star type candle. It's kind of, the body's a little bit too big to be a shooting star, but it is, in my opinion. And that means that this 10-minute chart, which is the intraday, could start pulling back. But because it's just a 10-minute chart, doesn't mean it's going to pull back for very long, and it may actually continue higher on its trend, which is up. Okay, so even though I initiated a short, there is still a possibility that we could still continue higher. Okay, so just keep that in mind. I'm not doubting that. There's no solid evidence telling me otherwise. But the reason why I initiated the short was my stop is close, and I think the markets are pretty weak. Why do I think that? Let's check out stocks like the leader of finance. This is a chart of JP Morgan. I haven't done an analysis on this chart for a long time. So instead, I'm just going to take a look at it the way it is now. If we make a lower low here, okay, and then we come up, so let me give you an example here of the trend again. All right, if we make a lower low, meaning a lower, so this is the low here, the previous low. If we come down and we make a lower low, and then we come up and we make a lower high, that is an indication of a trend reversal. Either a trend reversal or a triangle is going to form. Okay, boom, boom, and then we're going to continue downward. So JP Morgan, as strong as it was, look how strong this is. Hardly any pivots. Boom, hardly any pivots. Right now, we come down, we make a pivot. We come up, we make a pivot. Now these are solid pivots. This could be an indication of a weaker market. Let's look at Apple. I've been telling you guys Apple has been weak for the longest time. Same thing. Lows, lower lows, lower lows, highs, lower highs, and lower highs, and so on and so forth. It still has not been able to recover the previous high yet. It's still a lower low. This guy could still come down even a lower. It's possible. But as of it is now, the biggest, strongest stock in S&P 500 is weak. This is the chart of the SLV, and this should bring back memories for you guys from literally last year on the 14th. December 14th. I think Favco has been watching my videos since then, and I think Favco will probably remember this video here. I did an analysis on SLV, and I've had these mathematical calculated levels since December 14th, or was it, yeah, December 14th, and the way I've predicted how much SLV would fall was you just get the middle of this triangle, of any triangle, right? You draw a line and you bring it to the breakdown point, or the where it breaks down from this bottom trend line here, and that's where you can pretty much tell how far it's going to go down, and that's exactly what it did. Isn't technical analysis amazing? Okay, we come down right into the 3011 intraday, we get a bounce, and then we gap all the way into the 2875. We go right back into the 3011, come back down into the 2875. I mean, it's these mathematical calculator levels are just, it's just amazing. We come all the way up over here, we gap below the 3011, almost perfectly under the 3011. Intraday, we bounce right back into the 3011, come all the way down, we break down from this 2875. Okay, we come right all the way into the 2773, and then now we're just trading over there, and then now looks like we're getting a little bit weaker here. Okay, so that's the SLV. So that brings up the question, where would I trade the SLV for bounce? I may attempt to try it right around here, but that's not very important, is it? Let me tell you what's important. This is the dollar. UUP is the 3-letter. The dollar is very important because it's inverse to the markets. Okay, and what's important about the dollar is you have a resistance here right at the gap fill. Okay, technically though, oh no, yeah, that's the gap fill. We have this up move, and now we're just consolidating here, very messily consolidating. This could, not saying it will, could potentially break through up to the next resistance point, which would be this pivot point here. You're gonna have some over here, but not very strong. Most of your resistance will come over here, which means we still got a long ways more to go, which basically means because the markets are inverse to the dollar, the markets should fall. Again, if we get another pullback here, however, then the markets will continue higher. Okay, so just keep that in mind. Alright, this is the chart of the SPY daily once again, and I just want to say, I'm not sure what's going to happen. Again, nothing's conclusive, nothing's clear, right? Normally we get clear, sometimes we get clear the signals. Everything lines up, all the stars line together, and I know exactly what to do. But this one, mixed signals. What are the mixed signals? We have market manipulation, that's one. Two, we have a possibility of it continuing higher simply because the trend is up. Okay? And why do I think the market is due for a drop? Well, we haven't had one for a long time. That's no excuse, but we need to have a correction in order for the markets to be healthy. We all know that. March is normally that time. One last thing I want to show you. Let's get a better, clearer picture here. Okay. Let's zoom out all the way. Let's see, what is this? 2012. Alright. Last year, April 1st. Okay. We get a pullback. We come almost close to closing above, right? And then we correct. Let's take a look at 2011. I don't know if it's going to be the same. Maybe, maybe not. Maybe not so much. This is around April 1st. We get a pullback. It wasn't a correction, but it's definitely a pullback. We actually go higher before we correct. Okay? This is just for fun. This is the first time I'm doing this actually. I haven't, just kind of guessing here, as you can see. Okay, this is around April 1st here. We move a little higher first before we have a huge correction, okay? And that was in 2010. So to make a long story short, March or April seems to be the pivotal time of the year. So I may be wrong with this, and that's why I didn't go all in. And when I say all in, it's not all my capital, it's just my normal amount of shares that I normally do. I just went half. And I'm just waiting for that reversal to happen, or those signals or the stars to align, to come in. But as a business, we have to make money, and right now that is how I do it. I wait, I'll get stopped out, and I wait again and see what happens. Eventually you're going to catch the top before the correction, and you'll be making some pretty good money. Anyways, I know I'm talking a little bit slower today. I hope that's okay, but it makes these videos a little bit longer. In any case, you guys have a great Easter day weekend. Have a great week next week. God bless to you all. And again, thank you very much for those comments. I really do appreciate it, and I really do appreciate the views and the time you take out of the day to watch these videos. So God bless to you all again. Have a great week. Good luck to your trading, and I hope to see you in the next